Hello everyone, this is Teddy Keckstead, and it is Wednesday evening, October 28th, 2020, and we are here with the Forex market analysis for the 29th through the 30th, the closing 2 days of the week, to see how things are going to go in front of the weekend before the U.S. elections. So before we get into our commentary and our analysis, we want to put up our disclaimer real quick to remind you that this webinar is for illustrative and educational purposes only. And also, we want to give you a quick plug for the book, High Probable Japanese Candlestick Patterns. It's available on Amazon.com in paperback and Kindle versions. Through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. With that, let's get to our live action scene here. We are at the Forex-Trading-Unlocked.com website. We already have the workstation page pulled up, which you would get through the nav bar. And here we go. We have the dollar index, which had a nice little rally today, and it's been consolidating. I think you need to key off of the last lower move high and lower move low for your breakouts. I think that over the next couple days, we're going to see a lot of sideways congestion as we get into the election, into next week. And then Wednesday, whether there is a result or not, we're not even going to get into that topic, as we know who the new president will be for the United States. This is the projected forecast, is if there's a Trump win, most likely the dollar index will get a little bit of a lift. This could be supported also by the coronavirus pandemic, which is now exploding again globally. The dollar is a flight to quality currency, even though it has been beaten up recently. It stands to reason that the dollar is probably going to remain fairly firm in the wake of what is going on right now. A Biden victory would probably help to pressure support once again, just because of the forecast of what is to come, expected on the things that are talked about as far as the reversal of tax cuts and what have you, and lockdowns and other measures and things like that. So let's look at the components of the dollar index that are moving. So the euro US dollar took a little bit of a hit today, just like many of the other currencies versus the dollar. The dollar bulls came out in full force today. A lot of this may be, I think, mostly because of the sell-off in global equities, the shutdowns right now, and also the luring thought that oil also is going to be suppressed. With that happening, with lockdowns and slowdowns in the economy, this is something that not necessarily makes the dollar bullish, but it makes things weaker for a lot of other economies. The EU especially obviously has taken a hit over the past few sessions. I think that today, for Thursday into Friday, I wouldn't expect very much. Now, the key thing you have to look at here is this. We came today, we made a low, and now we're trading right around the close of Wednesday's session. We made a higher move high. We did not make a lower move low, but we pierced this upward sloping support line right here. This is the trend line that's keeping the correction to the upside intact right here. If this is a bear trend that is forming, then it stands to reason that we would stay sideways to lower. If anything, we may buck up against this downward sloping resistance line right here. Any penetration here would have us challenging this $18.88 area, testing this recent high from a week ago. If we take out that high, all bets are off. It's neutral to higher outlook for the euro US dollar. And most likely, if the euro is up there, because it's the number one component in the dollar index, it would stand to reason that the other currencies also will probably be very bullish versus the dollar, at least as far as the European ones are concerned. Now, with the lockdown measures that are being put in place right now, it's unlikely that we're going to see a very big extreme rally in the euro. So should they break out, obviously $1.20 here would be the next target to the upside. It may challenge this, maybe even pierce it, but I doubt that you're going to get a very big run above it. It would have to be something that really catastrophically hits the dollar to, I think, really cause that kind of momentum. Now, to the downside, the key thing is we pierce this upward sloping support line. We closed above it, and we're trading above it right now. If we fall below this again, and especially if we take out this $16.89 level, that means we made a higher move low. It would be a lower move low, or excuse me, a higher move high, and then a lower move low. Not necessarily making us bearish, even though it is an intermediate term bearish trend. It would have us on the neutral phase no matter what, but it would definitely have us looking for a test of this $16.14 area. If it comes below this and takes out this level, well, then all bets are off. The bear trend is confirmed, and then dollar strength and euro weakness is something that I would say would prevail through the rest of the year, literally. Remember, we're coming into the elections. It's November 3rd. There's only 2 months left. So if we come through the elections and all of a sudden the euro starts to fall apart, I would say that most likely you could see the euro US dollar coming down to about the 114.5 to 114 area, most likely over the next, I would say 3 to 4 weeks. We're not looking for any major sell-off, but with the lockdowns and with what's going on in the EU and the trade agreements between the EU and the UK, Brexit, remember, is going on. These are things that weigh on the Eurozone. Also, Germany is flipping the bill. We know the credit markets in the Spain, Italy, and a couple other countries in the EU zone that have been a past 5 to 6 years. It's coming back to haunt them once again. So that, and also with weaker oil prices and the global shutdown and all these other variables, it's going to be really hard to get the euro to really rally. And remember that until the coronavirus in this year, the euro was trapped in basically a $4 to $6 range for a year and a half. It's had some amazing volatility this year. It had more volatility in the month of March than it had seen in 2 years. So for the market to now start to consolidate, maybe even in a $6 range, wouldn't be outside the realm of possibility. We'll probably have some nice swing trades going on in that type of environment, but with interest rates where they're at, it's going to be hard to really get some really major trend moves unless there's a really bearish reason for the dollar to fall apart or some really major reason for the dollar to be a big-time bull. I don't see that really happening, at least for another 6 months at least. We have so many variables besides the elections. We have the U.S. elections next week. We have Brexit by the first of the year. We have the coronavirus now with global lockdowns happening again. The next 2 to 3 months are going to be pretty much up for grabs, and it's going to be very hard to get a gauge. And especially with if we have a meltdown in global equity markets, it's going to be tough for the euro to get a really big rally. And it may be even tough for the U.S. dollar to get a big rally. The currencies may become something that goes into a flat line, because we know the interest rates are not moving either. So since there's flight to quality is usually the treasury bonds, the U.S. dollar, and then certain currencies, if those currencies can't move because of political or economic, principles, such as the fact that the the U.S. Fed has made a stance that no matter what, they're not raising rates for at least a year. Then you have the EU zone, they're still doing it around QE20 for all we know. They just keep on doing quantitative easing, and they're definitely not going to raise rates either. Variables keep the currencies in an area where they can't move. There's only a range that they can trade in. So until we have some reason to have any real viable breakout, I think we're going to probably come into a period where we're going to set a range with most of the currencies versus the dollar, with lots of opportunity, but that's probably what we're going to 6 months, just because we're going to have deja vu all over again from what happened just a few months ago. All right, let's move on to the pound US dollar, the second biggest component in the dollar index. This one also sold off nicely, and right now it's hanging around the close, and looks like a very similar chart. Now this one here made a higher high, has not made a lower move low. It's hanging just above the upward sloping support, and we're wedging very tightly. And it's kind of funny how in both markets we're coming right into the elections and even just past it, this little inflection point. So even as the market starts to go by attrition to either go below the support or maybe above the resistance, even if it's going sideways, we're getting ready for a move. The U.S. elections is the first big event trade that we're going to have for the next 2 months. After the U.S. elections, the next one is Brexit. It's 2 months away. There's a gap in there, but then we have the coronavirus. Who knows how that's going to go globally to deal with over that 2-month period. And also, it's going to be hard for the Brexit negotiations to get handled properly in the midst of all that, too. So we'll see how that pans out. Right now, we're looking at the U.S. elections, and I think you have to be cautious that we're probably going to have a lot of spiky algo, kind of thin volume trading going on, where like I said, through attrition, we could possibly take out the support line again. Only if we take out this $28.62 level to the downside or rally above $31.84 to the upside, do I see us really catching a move. Obviously, if we take out this last high, that we're making higher move highs, the trend is moving. And if we take out this low, well, then that's very bearish, and that means that this was just a corrective move higher, and we're set to move this market lower. This Trump win, Biden win thing here that we have here, this goes along with how we look at how the U.S. dollar is most likely going to go after the election, at least in the short run. So it plays into either this trend with higher move highs, the pound U.S. dollar continuing to rally, especially if it goes sideways into the election. A Biden win would probably help the pound go up. A Trump win probably would make the pound go down. This doesn't mean that one would make deals with them any different so much, because when it comes to Europe, our deals are pretty much already there. It's just a matter of re-signing, because with Brexit, it means that the UK is no longer part of the EU. So in order for us to have our trade deals, even though if it could stay the same as it is with the EU, we just have to rewrite the contract and agree upon it. I don't really think when it comes to the pound that there's going to be much of a deal or much of a problem when it comes to either president. It's just a matter of which way the dollar will go, most likely depending on who wins the election. Now, one of the things that you can really key off for these two currencies is the U.S. dollar Swiss. This market had a breakout to the upside today. It made a lower move low recently. It made a nice little bottom, but it is hanging right below resistance. And this is one that kind of sets the tone, I think, for the European currencies, because while they've really been trending and continuing to go against the dollar, the U.S. dollar Swiss is starting to stabilize. And it's really, if you look at it for the past 4 months, it's just at the lower bottom of its range, which it just bottomed off of. And now it's kind of right in the middle. I mean, look at it. It's trading at right now 91.02. Well, if we go back to July 30th, the close of that day was 90.89. The high was 91.54. So, and for the most of the time going through there, this is where it's been trading. Right here, right around this level right here, right around 90.94. So hovering around this major pivot, this is the major support line. It's basically a median. It's staying steady. So we'll see how the Swiss reacts after the election. If it takes out support, I have to say, if the U.S. dollar Swiss takes out these lows, especially the recent ones that were set, what was it, back on October 20th here at 90.30, a failure from there is definitely bearish. Taking out this low from August, the low was 89.98 on the 5th. Yeah, so 89.98 was the low. If it fails from here, from this low back on August 31st, which would be 3 months, 2 months since then. If we take that out, that is very, very bearish, because right now it's kind of in a very good consolidating bottoming category. If the market's going to be neutral to higher, it's pretty much set its low, and now is the time to buy the dips and look for a rally to occur. If it fails, that is very, very bearish for the U.S. dollar, because remember, the U.S. dollar, the Swiss, and the yen are the three flight to quality currencies. So if the Swiss is stronger than the dollar is obviously going to be weak versus a lot of other currencies. So this is a good indicator for those European currencies. Now let's look at the U.S. dollar Canada. Now this is where you have to start to think where the dollar might get a lift. Slightly lower on the trading here now, going into Thursday. We had an upside breakout after it's been trending lower, making lower move lows and lower move highs. It made a lower move low and a higher move high today. This is big right here. It came into our little consolidation zone and stayed in this area, which we were looking for it to contain itself for the election, and it busted out of it. It already took out this high right here. This is what gives me a little inkling that U.S. dollar strength, at least going into the election, is probably going to stay there. We're not going to have the dollar beaten down. I'm not calling for a dollar rally. I'm not even calling for the U.S. dollar Canada to make new highs before the election. It may trade lower into the election, but I don't think you're going to see a major breakout to the upside. Unless you fail from this lower move low back here around $1.3081, which is 2 full dollar basis points away, I don't think you're going to see that. And since we made this higher move high, after making a lower move low and a higher move high, that's indicative of what? A potential short-term trend change, or at least a neutral environment. A neutral environment going into the elections makes sense. The Swiss is very quiet and neutral going into the election. So is the Canada. Makes really good sense. The pound and the euro, that makes sense why they're a little bit more volatile. There's the Brexit they have to concern with, and also the fact of the shutdowns. The EU shutdown affects multiple countries. The UK shutdown affects, obviously, the pound. So now let's go to the U.S. dollar yen. Now this is where you're going to see something that's a little interesting. Compared to the other currencies, the U.S. dollar yen aims to not disappoint once again. So while the dollar was doing well versus other currencies, it wasn't doing well versus the yen. That's a good sign. Normally, there are times when all the currencies rally or break against the dollar, but typically when they're just trading and what have you, the yen is not necessarily in tandem with the European or even the North American and South American currencies. The yen, even compared to the Aussie and the New Zealand, which is also in that trade zone, typically will go the opposite way a lot of times. So while the dollar is gaining strength versus the euro, the pound, the Swiss, the Canada, what have you, it's going to fall against the yen. And then the opposite is true if they go the other direction. Now, is this a guaranteed? No, but it's not unlikely or unusual for this to happen. This is happening right now. Now, here's the thing that's very interesting. The Japanese yen remains in a bear market. It's making lower move lows and lower move highs as it continues to trade lower. Today, right now, on the Thursday's trade, remember the Asian markets are open. They're having a nice little rally, a little bit of bullishness here with the U.S. dollar versus the yen. I think it's more profit-taking than anything, and that's something else here. You have dollar strength in the yen right now. Let's go back to our euro U.S. dollar. So while the U.S. dollar yen is rallying, we have a little bit of a rally in the euro U.S. dollar. So what does that mean? The dollar is going down here. So euro is going up. So is the yen's going down. So U.S. dollar JPY will go back. So things are trading pretty much in a normal correlation right now. Remember, I always say the best indicator for any markets is the markets themselves. And they're in real time, they're live, they're not lagging, they're not forward, they're actually live real time. So right now we have the US dollar yen rallying on its highs right now of the day for Thursday as we speak. This seems to be the way it's going to go. Like I said, we made a lower move low today. It's a profit-taking move. I would not doubt that you might see the U.S. dollar yen still continue to rally over the next few hours into Thursday morning's trade before the equity markets open up. Remember, the equity markets are getting hit. Oil's getting hit. U.S. dollar yen most likely going to get a little bit of a pop. Probably going to go the other way with the other currencies. Now let's get into some divergence. Big word for technical analysis and trading. For the Asian trading zone, while the U.S. dollar yen is in a bear market, the Australian dollar US dollar market has been in a bear market as well in the intermediate term and short run. Had a big sell-off today. Right now for Thursday, it has a little profit-taking. Now I think it's just exactly that, profit-taking move. Remember, lower move lows, lower move highs are indicative of what? A bear market. Now we have this upward sloping support here off of the low from a week and a half ago. A failure from here, which is just above it, that would have this market careening down lower. Now one thing you have to think about when it comes to Australia is they have all their eggs in one basket. One of their biggest customers is China. There's an embargo on Australian goods from China, of all things. Why? and how this whole thing came together is that would be a whole webinar in itself. But believe it or not, in the midst of coronavirus, global lockdowns, and what have you that Australia has to deal with, their biggest customer is now putting an embargo on a lot of their commodities. That's not good for Australia. So besides the fact that they are having production problems because of lockdowns and other things, they have issues with the fact that no one's going to even take their goods. So as far as the Australian dollar is concerned, it doesn't matter what the dollar index is doing, what the other currencies are doing, even in this part of the world, in this trade zone. And this is where I think you have lots of opportunity for the next 6 months at least. The Australian dollar most likely will be a bear against most currency crosses. So even though we're talking about the Aussie dollar, US dollar right now, Aussie dollar versus a lot of other currencies probably isn't going to do very well. Let's look at the Australian dollar versus the New Zealand dollar before we get into the next currency. Look at that, tanking like a rock. And this is where I think you have lots of opportunity once again. Like I said, the markets are the best indicators of how other markets move. Australian dollar falling like a rock in water to the bottom right now versus the New Zealand dollar. Look at this trend. Boom, 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 boom. It's been trending lower since the middle of August. Even though both have been a bull for the most part versus the dollar, with some swing trades and now finally starting to go lower. Let's look at the New Zealand dollar versus the US dollar. Had a big sell-off today. Definitely was not the best days for the New Zealand dollar, US dollar, but it's been making higher move highs and higher move lows. Today is a short-term sell signal. I think that going into the election, it put the top on the rally, if you will, at least for the next week. I don't see, this is a bearish engulfing line sell signal right here that happened today. Right here. This is very negative right here. It's trended nicely into it. Boom, we had this sell-off. Most likely we're going to have a neutral to lower trade. We may have a little profit taking over the next day or two as we go into the election, end of the week and into the election. A Trump win, this signal would just help to really compound the dollar strength, at least in the short run, and send the New Zealand dollar targeting this 65.52 level. Only a failure from here would have us pressing this upward sloping support line here. If it took this out, then I could see us having New Zealand dollar getting pressured a lot. I would be very cautious with this. If you look at where it's been for the past, since the middle of July, oh my gosh, we go all the way back to the end of July, and here we go, basically unchanged. This is the markets that's been swinging, boom, 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 boom. This is your medium right here, right around 66.5. This right here is your main pivot. I think most likely you're going to see it continue to gravitate and swing trade around this pivot probably for the next like couple weeks to maybe even couple months. Now, the Trump win, Biden win thing here goes with the whole way the U.S. dollar goes. Biden win may help fuel the New Zealand dollar even more because of potential dollar weakness. A Trump win, I think, would keep this more in sideways and necessarily make it bearish. So I think you may test the bottom end of this range and bounce around that, but that's about all you're going to see from that one. So now let's go to the Australian dollar CHF. Now, why do I do this? Because we want to talk about this whole divergence thing. So here we go. Australian dollar, very weak versus the Swiss. It took a big hit today. It was rallying for the past week and a half, bounced, and boom, here we go. Profit taking today. The question is, do you think it's really bottoming here, or is this just another corrective move before it barrels down lower? Let's look at the Australian dollar versus the British pound. Reason being is, looks very similar to the Swiss. Very negative. Australian dollar, once again, losing strength. So, like I said, use the markets. They're the best indicators as a not a forward or a lagging indicator, but an in the real-time trading indicator. They help you give you a sign of strength and weakness. Australian dollar is a bear versus the pound. Australian dollar versus the Canadian dollar. Let's see what happens here. It's loading up, I think. Here we go. Australian dollar Canada, very similar chart too. So it bottomed recently. Now it's trading a little bit sideways. We're going to come into selection. We'll see where it goes. But here, bear market as a whole. So the Australian dollar, like I said, for that trading zone, I would be very, very cautious. Now let's do JPY versus AUD. Oops. Sorry, we got this in reverse. Let's do the AUD over JPY since we're doing the single cross rate that way. Okay, once again, this one is falling apart too. A little bit of a correction today going on. Asian markets are open. Looks more like a profit-taking move after a sell-off like it had today. Look at this. This made newer move lows. Once again, like I said, here's your lesson for the day, how to use other markets as your indicator to give you true gauge of strength in a currency. Today's trading took it out this low from here, took out that low from right there. So now what does it mean? Remember this? Here was a high, right? Now on the grand scheme here was this high, low, lower move high, lower move low. So after today, what does that mean? Bearish trend. Here we have from here, this high here. Here's our lows, lower move high, lower move lows, bearish trend. Very bearish, very not, very little chance of trying to find some support here right now. So, and as far as strength for Australian dollar, it's just not there. It's just you cannot find it. It is not there at all. So let's go to Australian dollar, US dollar once again and show you why we did this. Here was our little lesson in how you gauge markets with a real good indicator in real time. So all those charts we looked at, this is consolidated. Why is this one not so extreme? It's because it's the US dollar. The US dollar is the biggest currency out there. If you go back in this video, if you liked and subscribed to our channel, you can go back on our YouTube video after this and go over this lesson, and you will look at those charts and you will see that as we went through the Australian dollar versus the New Zealand dollar, the Swiss, the pound, etc., those markets are not as strong or have the highest weight and globally in the global currency system as the US dollar. So this one is contained, and that's why we use those as a gauge. Every single one of those was showing what? Australian dollar weakness versus other currencies. Now, the dollar has been doing what versus most of the major currencies over the past few days to the past week? It's been gaining strength. So if you take the dollar strength versus the global markets, and then you take the Australian dollar right here and you lay it up against those other ones, what do you think is going to happen? Today we're going to have a little bit of a profit-taking rally like we have going on here, and then most likely it's going to go sideways into the election, and then it's going to fall and test support. So we'll see what happens. This was your main lesson for today. Hopefully you hung around in this webinar to get to this point. This was a little bit of a long lesson, but if you hung out for it, I think you learned something key, because it truly has been one of the best indicators and lessons I've learned for the Forex markets, especially because it's harder to do it in many other markets, but in the currencies it makes it very easy because there's all kinds of currency crosses. So you just lay one against the other and just take it from there, and just remember which ones are the bigger ones, which ones are the smaller ones, and what kind of trade you're looking to outline. And also remember the flip side on where you're at as far as which crosses which, whether with the, like for instance in this, is it Australian dollar over US dollar, or is it some other currency over Australian dollar? So just remember that when you're doing that kind of analysis. So real quick, let's look at the euro US dollar and see where it's at. Okay, so once again, here we are. Now, just like we did that for the Australian dollar, should we check it out for the euro real quick? We don't have any questions on the chat room here, but we have a couple viewers, so I don't know. I guess you're hanging on, so let's check this out. One last reason to figure out which way the euro is going. So let's look at the euro GBP. How's that looking right now? So we know the euro US dollar just came off of a higher move high. It's trying to make a higher move low. Look at this gibberish. This is just sideways radical volatility going nowhere. So strength or weakness, well, the euro is not stronger. It's just basically flatlining against the pound. But remember what we were talking about? The euro pound doesn't care about the U.S. elections. They got Brexit going on. Expect this to be a flatline curve. So let's look at the euro versus the CHF and see how this is doing. This is trending lower. Now remember, the Swiss is a flight to quality currency. Obviously, with Brexit going on, coronavirus going on, euro weakness versus the Swiss probably going to continue. I would say this would be a neutral to lower market. It's showing its colors. Now let's look at the euro versus the Canada. Remember that there were trade agreements made with the Eurozone and Canada not too long ago. Guess what? They got to make those again. Well, right now we have a little bit of a lift, but overall this has been in a bearish market for months, rallying over the past couple weeks. But the Euro Canada is in a sideways to technically lower trade over the longer term, and especially the way it's shaping up right now. Now let's look at the euro versus the JPY. So remember the US dollar yen, how that was going lower, meaning that the yen is stronger. Well, now let's look at this. The euro versus the JPY. Not looking so good. Remember, the yen is stronger than the dollar, and the euro is what? Not stronger than the yen. So, what does that mean? And it made a lower move low today. This is key right here. This low is taken out. So on a trend basis, euro Japanese yen is a bear as of today. It confirmed a lower move euro weakness, which means that if this is the way the euro really is compared to all these other currencies, then the euro US dollar, even though it's slightly higher right now and it came back a little bit on the day, I would say that this currency will be neutral to lower and testing support over the next week to week and a half. So we'll see what's going on. We had this bearish engulfing line sell signal. It came down into this little trading band right here. This was our initial target zone. Our second target zone was right here, just around this $16.89. But we already hit our initial one. That's good. Trade is complete. But now with our analysis, what we're talking about, longer term, I think going into the election, be cautious. Probably a little, you have to wait on this short. Probably sideways, but a sell rally forecast going into the election. With that being said, please like and share our video to your friends and subscribe to our YouTube channel, Forex Trading Unlocked. And don't forget to read the book, High Probable Japanese Candlestick Patterns, so you can learn how to trade that last bearish engulfing line sell signal that I showed you there. And it'll tell you how to line up your risk, your trading targets, and all kinds of other things for options plays, futures plays, Forex plays, stock plays, you name it. It works in all markets. Thank you very much once again. Good luck with your trading, and check us out at www